Hello, stock pickers, money makers, wealth creators, along with my co-host again, Thomas Bennett. I'm Andrew Cox, and this is Beyond the Ticker.
Welcome.
As always, do not consider this financial advice. What we talk about is our personal opinion, and do your own research, as we always say.
It's just two friends talking about their own investments, their own money. Don't take us seriously.
Exactly. So, as always, how's your week?
Week went quite well, actually. I got a interview. Haven't had the interviews for next week on a new job within the same company, but a higher up level, be a 12-month acting position, and I'll be getting out of my team as well if I take it, which is going to be it's going to be interesting, new experience, new role, slight step aside from investments, but I'll be managing people, so it's a step up and a development opportunity in that sense. So
absolutely,
fingers crossed.
Yeah, mate.
We'll find out next week if I've got it, I guess.
Excellent. Oh well, you better tune in. Episode 4.
Yeah. How's your week been?
Good. I mean, I'm starting my new firm now, so that's just around the corner. I've got to head across to Sydney for that, and so just been getting all my ducks aligned and trying to mentally get ready to work again. I guess as from the listeners, you would have heard I had 2 months of gardening leave, and it's good to get back out in the workforce and get going.
Are you worried coming out of early retirement?
No, actually, I find it extremely boring, and personally, I made me want to work. And I think that it's something that, it depends on how I'm later on in life, but I always want to be engaged in something, and I think that people that do, work a full career and then they decide to retire, they kind of tend to get, old quite quickly, I guess you could say, for lack of a better word, just with regards to, not having that mental focus or something to really do. And, so I kind of don't want to ever really have to do that. Do I need to do that? So
I guess when you love the industry you're in.
Yeah, well, that's right. This is exactly right. We're both pretty lucky that we're able to find an industry that we're passionate about, we're interested in, and engage with it. So always wanting to learn more as well.
And we hope to share that interest with you, the listeners.
That's right, and hope it comes through. Hope the passion comes through in our talkings. Excellent. So we actually touched a little bit on this before the podcast, or before we started. The RBA. So this Tuesday, they meet every Tuesday, first Tuesday of every month. And as we've sort of mentioned before, it's to tackle different things. They look at it in the economy as a whole, and they essentially make monetary policy decisions and depending on which direction they want the economy to go. And inflation being one that we've talked about before, it's a big topic at the moment. As you said earlier in the week, Tom, 5.1% Australian inflation came in.
Yeah, so we've talked about interest and inflation before, but we had to readdress this because forecast was coming in at 4.6% for the inflation to March, and the figure came out at 5.1%.
Yeah.
Which is beat the expectations hugely, which obviously in this sense is negative because it means that they got it wrong. Us consumer, our bottom pocket's hurting, cost of living's increasing. And then because the forecast by economists was so wrong, it begs the question, did the RBA have it wrong? And are they going to have to raise their interest rates earlier than previously expected? Now, a lot of people are coming out and saying yes, they will. So originally they were going to wait for, I think it was wages data that's not out yet. So they were going to say, they'll potentially lift it in the June meeting. But as we've discussed, the March meeting for the Reserve Bank of Australia is first Tuesday in May. And that's when they'll decide upon the rates, whether to keep it on hold or raise it. And are we now moving our expectation as well and saying we think they're going to raise it in May, or are we going to say they'll wait another month?
I think certainly the way that the markets reacted, like the share market. I mean, we've talked about sort of the intricate details with regards to RBAs and central banks' decisions making on markets. But I think that one of the things is about the perception of what they believe is going to happen. And sometimes when the market as a whole has an expectation that it's going to occur, it makes a decision for the RBA a lot easier.
Yeah.
Because it's already kind of priced in. So look, I wouldn't be surprised if they don't, but I do believe that they'll look at doing it. I think they're going to raise.
And we've seen it with in the bond market as well. We've seen the 2-year Australian yield has gone up. Meaning that they're expecting rates to rise earlier than expected, while the 10 years coming down. So that's just showing that they're expecting short-term interest rates to rise, and that's kind of it's not necessarily forcing the RBA's hand because they have gone against the market previously.
Yep.
But if this is the direction they're wanting to head in, it does make it a lot easier for them because there's going to be no real big spike in their market. They're not going to cause any major disturbance if they do decide to lift rates.
Yeah, and I think that at the point that they're at the moment, with the market expectations, reaction of what the inflation data came out with, I think that they're probably better off because they know that this isn't going to be the only raise that they do.
There's a few coming down the pipeline.
Yeah, and and it is always a, it's not, I mean, apart from what currencies react to what a central bank does, the data that comes through, it's a long process. It's, they'll raise rates, but they don't expect that to happen for another 3 to 6 months or have an effect for that sort of period of time. It's not a really quick fix. So I think that we stand now, they're better off doing it, a 0.25, or, even if they just wanted to sort of tread the water and do a 0.10, just to sort of get them started. Hey, wherever we're happening, we're doing it. So that's what I think we're heading towards. I certainly don't think we'll see a 0.5. I think that will probably shock the market quite a lot. But yeah, I do think that that's going to happen. Like I said, I won't be surprised if they don't, but I do think they're going to do it.
And other loose ends to tie up. It's been announced that Twitter has officially been purchased.
Yep.
The board's accepted Elon Musk's deal.
Yep.
What does this mean for the company? What does this mean for Elon's other businesses? What does this mean for the market as a whole? What are you thinking?
Yeah, well, look, I mean, it's been really topical, I think it's excellent that he's getting involved in sort of like a sort of counterparties and then the high wealth Mecca guys. He's got a social media platform now, so him and Zuckerberg could talk about a lot of different items, I'm sure.
Is Donald Trump going to come back to Twitter?
I reckon he is. I for sure. I think that Elon Musk is a big contributor to Twitter, and like I think we've talked about this before with regards to Twitter hasn't really taken off in Australia that much, but it's the fastest platform for information. Like, you get tweets from the president of biggest, arguably one of the biggest countries in the world. So it's really interesting platform, and I do think he's going to come back, and I think that I'm not sure what he's going to do with it, but it's going to be interesting.
I saw a news report that the lawyer in charge over there at Twitter, when announcing that Elon had bought Twitter to the workers, started crying, and I thought that was quite funny because obviously she's one of the ones that was probably going to be out the door. Yeah. And there are going to be a few key people within Twitter that are either going to get the axe or going to have to really adjust to the new rule, really.
That's right.
The board is probably going to get a bit of a shake-up.
Yep. I would say that's certain.
And then top management position is going to follow. So that's internally, that's probably what's going to happen with Twitter.
Yeah.
And we also saw Tesla's share price take a dive.
Yeah. And this is actually an interesting point because we talk, and we see so much about Twitter and what Elon Musk is doing with Twitter. But then, as a shareholder for another firm, are you worried about the split focus and the focus that he's putting on Twitter, where he's got two other massive, institutions
His focus is already split 5 ways.
Yeah.
He's got the Boring Company.
Yeah.
He's got OpenAI.
Yep.
He's got Solar City, which got absorbed by Tesla, of course. That's Tesla. And then he's got SpaceX.
Yeah.
Now he's got Twitter.
Yeah, absolutely. And, and like you said, you touched on the three major ones, of SpaceX and the Tesla, and now Twitter for
those are huge businesses having big impact on our society in the future and everything.
Yep. And so, we've obviously heard announcement that Elon Musk has started selling some of his shares in Tesla, and the consensus around that is that it's to fund the purchase of Twitter. Yeah. And so that's quite interesting in itself. And then, like, as an investor, I said, are you worried about your figurehead? Because that's what he is now. Your figurehead, taking his focus away. What his goals are with Tesla. I think that probably Tesla is it might be a bit of an overreaction from investors. And the reason why I say that is because I think that Tesla is, although it's still a new business, it's relatively set up. It's a business that, it's selling products. They've got a very good product. And I know a few people that own Teslas, and they're excellent vehicles. And it's only going to get bigger with sort of not the regulation, but the stimulus that governments are sort of putting forward and pushing for this green sort of vehicles and green energy and everything that goes along with it. So I think he's not like, and he's certainly not turning his back on it, but it's something that he's probably comfortable where they're sitting, and he's got key personnel that will be managing it. Like, never have I ever thought that Elon Musk is running in and doing the day-to-day of the business. He's a figurehead for the firm. He'll have key personnel that do the operations and the management of the business. So it probably wouldn't be a bad time to buy it.
We've both read Shoe Dog,
Yep.
which is the famous book that discusses the story of Nike,
Yep.
and how Nike came to be the big, worldwide brand that it is. And I see some interesting parallels between Nike and Tesla. And the interesting parallel that I see is they both had troubles in the early days meeting the demand. So the problem wasn't that the business couldn't find customers. They had customers everywhere, but they couldn't make enough shoes in Nike's case and cars in Tesla's case to meet the demand. And I feel like once they, obviously we see Giga Berlin, we see Giga Shanghai, Elon's putting factories everywhere. So once they ramp up that production to finally meet the demand, people have been on the waiting list for the Cybertruck for 3 years and not one's been made yet. I personally am looking for a Model Y. There's a lot of people who really want these cars, but they just can't get their hands on them.
Yeah.
So once they iron out those kinks, they're dreaming. That's the best problem to have as the business, is how do we get enough of our product out to the consumers?
Yeah, exactly. And I think there's a huge focus, because I mean, it's not like you don't necessarily buy a Tesla just because of the the benefits to the world and the green greenhouse gases that get eliminated from losing electric vehicles. It actually is an excellent product. I mean, you go in there, you've got your computer essentially in front of you, and the cars are excellent. They're super quick, real fast, and just as a I wouldn't say a petrol head, but someone that likes cars, they are an excellent car.
Yeah.
So I know, but you're absolutely right. It's really interesting to see sort of some of the parallels with regards to a more established business like Nike and Tesla, what they're going through at the moment. So it's certainly it's in my opinion, there's only going to be more demand on it when governments start getting closer to these deadlines that they're creating with themselves with regards to being green neutral and so on and so forth. So
No, it's an interesting place to be, and I think government mandates on non-combustion engines, so saying they at least have to be hybrid. In Australia, admittedly, we don't see any of this because we are falling very far behind in terms of this. But over in Europe, they're saying no more combustion engines as of 2030. I'm pretty sure some of the deadlines are 2025. So these deadlines are coming really quick, and Tesla is incredibly positioned to really take advantage of this. And they've got some advantages over the other car companies in terms of range of the batteries, because their batteries are far superior. They've got the added advantage that they're first mover in the market. So their charging network is far, far greater than any other company, purely because they've been there longer. They've established the sites. They've got charging networks everywhere. But the negatives are, there's been problems with build quality with Tesla. So, when you go and you get a BMW and the panels are perfectly aligned, there's no gaps anywhere. With Tesla, you see a few complaints that, there's a millimeter gap here, a bit of a gap here. And it's nothing major, but for someone who is looking to buy a quality car at that price range, it is quite important.
Yeah, absolutely. I guess the other thing is the goodwill of the Tesla brand that when I say goodwill, I mean, it's synonymous with electric vehicles. It's kind of like when you say cryptocurrency, people say Bitcoin. When you say Tesla, you can... When
you say electric vehicles, you think Tesla.
No. So it's just something that is so synonymous with it that they've just got that huge advantage already.
What blows me away, and we should probably move on, but what blows me away is not $1 spent on advertising. And here we are talking about Tesla all the way over here in Australia. It's unbelievable how a company can become so well known worldwide and not $1 spent on advertising.
Yeah, agreed. Yep. Like I said, we'll park that one there, and but it's going to be interesting to see how it does. So I think we might see a bit of a rebound personally, as some sort of people will see some value out of that.
Yeah.
that fall. All right. So COVID lockdown in China. So,
China is still going for the zero COVID policy,
Yep.
which means they're going for zero cases across their borders. So if there are cases, they're locking down entire cities. Now, we've obviously, everyone's seen it worldwide. It's very hard to stop the spread of COVID.
Yep.
We've been locking down buildings. We've been locking down postcodes. We've been locking down states.
Yep.
We've had hard borders.
Yep.
We've had COVID cases slip in. Everyone's aware of how easy COVID slips through the gaps. But China are still trying the zero COVID policy, which means that they are locking down cities.
Yeah.
Now, when China is the biggest manufacturer in the world, and all of a sudden you have a city of 10 million people locked down, 10 million workers stuck in their homes.
Yep.
You know, it's going to have ramifications.
Absolutely. Yeah, it's so interesting, and also just to think about how it's sort of changed from our perspective as well, because like you mentioned, there's been hard borders, and being based in Western Australia, we've been completely isolated. We're already isolated as it is, but we've been completely isolated from the rest of Australia and the world with our hard borders, and now we're actually the highest infection rate in the world at the moment. So we've kind of completely flipped on our head, and yeah, China's still going through lockdowns, which almost seems a little bit absurd with the way that the rest of the world has adopted a COVID acceptance policy in a way, because that's the way you can sort of argue it. And then but yeah, the supply chain issues that's going to trickle on again, like we're going to see transitionary inflation again.
Yeah.
And I did a quote unquote as I look at Tom with that one.
Yeah, well, yeah. It's a very interesting point you touch on. The inflation pressures that are going to come through, obviously, when people can't get their goods.
Yep.
And car manufacturers obviously hit the hardest because they have big units, which is not easy to quickly ramp up production of a car. It's quite in depth. Apple has come out a record quarter.
Yep.
Stock price fell. Why? Because they said in their forecast that they're having quite a few issues with supply chain, and that this record is not going to continue.
Yeah, that is the flavor across almost all business that do importing or exporting.
Everything's made in China.
Yeah, for the last sort of 12 months or more.
And if it's not made in China, there's one part in the back of the computer, that one tiny chip or that one wire that is made in China that they can't get anywhere else.
Yeah.
So
yeah, it's if they have problems, the world have problems.
Yeah.
So I mean, hence the global destruction that we've seen on the back of COVID. The effects that it has on it, and also with shipping, with the delays that happened with it. Shipping prices went up from, I think it was like sort of $2,500 for a container to like $12,000 or $10,000 container. It's been astronomical. People are paying so much money for shipping nowadays. So, and that, as we talk about, that trickle effects goes to the end consumer.
And here at the Beyond the Ticker, we don't like to get too political. We like to stay neutral.
Yep.
But the civil unrest in China is actually growing. So you don't hear much of it in the news. They try and keep it out. But obviously, with everyone locked down, they're delivering food to the doorsteps.
Yeah.
Lots of people are getting sick. There's gastro flowing through because some of the food was bad. And now people are throwing the food out off their balconies because obviously it's quite condensed living.
Yeah.
Like we're locked down. We're complaining. We got a backyard. We got pools.
Yeah.
We're very fortunate. They're in huge high rises. They're not allowed out in their balcony.
Yeah. Yeah.
So people are going out in their balconies. They're screaming out the windows. I don't know. It's boiling.
Yeah. Well, like it is. That is. That's why we bring it up. It's going to be an interesting point, and it's going to be interesting to see how that develops and how they do tackle it. I mean, I think that eventually they're going to have to adopt like the policy and acceptance of living with it. I mean, I just don't see long term that works.
We see tensions with Russia, Ukraine.
Yeah.
Heaven forbid anything escalate with China.
Yeah.
I don't see it happening. It's definitely a potential. Everyone's talked about it, but in today's society, people aren't picking up guns.
Yeah.
In the first world, we're not going to be on the front lines. There could be cyber warfare. There could be political warfare, which we already kind of see a lot under the covers. The reason I bring this all up is because there's a lot of potential that could come out of this in terms of disruption to the markets and to business?
Yeah, absolutely. Yeah. Global duress is one of the key contributors to what moves markets, in all markets, FX markets, equity markets, debt markets, all of it. So it's very important to keep your finger on the pulse and understand what the effect has on it and why and how long. And I guess that probably leads us into our next part, which is, when do you sell? When do you sell a share?
When do you sell? Yeah, it's hard. Both you and I, we're great at buying.
Yeah.
But when do you
Excellent,
sell?
actually.
If you're up 100%, do you sell? If you're up 200%, do you sell? If you're down 50%, do you sell?
Yeah.
What do you look for, Andrew, when you're going to sell a share?
Well, the first thing is that I think we've mentioned it before, I like to be a value investor. And, I go back to a couple of different lines and looking fundamentally at a business. Do I understand it? Do I understand their product? Obviously there's an overall market consensus and where the market is. I try to buy a company like, I guess, the Warren Buffett way, where you buy a farm. You'd buy a farm and you wouldn't look at the farm if it goes up in price or down in price. It's a long-term hold for me, generally. But in saying that, when I go into a share, I have an expectation of what I think that it will get to or what I want to get out of it. There's certain shares that I get into because I think there's certainly capital appreciation and there's going to be growth out of the business. It might even be a mature business that I still think that there's going to be growth, but also there's the dividend component, and it's a really a massive long-term thing, something that I might never sell, or I'll just keep reinvesting dividends and reinvesting. And then there's some companies that I'll jump into because I think that they've got some good growth over the next year or two, and then or if I can get a certain percentage out of it, I will. So, and that's more the skeptical side of my investing. But then still, it's for a certain period of tenor. Like, it's not ever short. Like, I'm certainly not a day trader by any means. I'll actually use Zip as one. I actually bought into Zip, and I think we've touched on this before, and it went bought in quite, not early, but relatively early compared to Afterpay, and I thought that they had a lot easier entry into the States by buying a company based in the States, and they're going to grow their platform like that. So I saw that opportunity, and then in about a week, I think I think it doubled it, and then I was like, this is just too much. I'm certainly happy with a return like this on my investment. I'm getting out. And so when markets are acting crazy, certainly from a positive aspect for myself, I will look at selling. And it might be something, and
markets do tend to either overshoot or undershoot bad or good news. Do. Markets overreact.
Absolutely, 100%. And so, but overall, I think, when you should sell is aligned with the reason why you buy the company, and so once you're in the company, there's never a perfect time to sell, but in the same word, there's never a perfect time to buy. So because you're never going to pick the bottom of a company, and you're never going to pick the top of the company. There's people can do all the technical analysis that they want. That's not going to happen. Anyone that tells you that is completely a liar.
Or the markets are broken and they're the one that's going to be a billionaire. Because when people do start that, you hear it, this person picks the top, this person picks the bottom. If this person can pick the top or the bottom, the markets fundamentally don't work anymore.
That's right.
Because markets are, they show the change in sentiment. It just, defies logic for someone to be able to pick the top and the bottom. It doesn't work like that.
That's right.
That's not how these things go.
So, I mean, that's my point of view with when to sell. I'm not sure if you've got a different view, Tom.
So I'll give you an example of something I've recently sold, which is the codes LIC, Lifestyle Investment Communities. Bought this company about 6 years ago. They buy and build houses for old people. Come in, come out, as they do. They've been actually quite a bit of a growth company for myself. Obviously, if you look at the share price over the last 6 years, they have gone up quite substantially. I missed the peak. They peaked and they've started coming down. And they've started coming down for two reasons. One, inflation increasing. We've discussed this. Interest rates rise. And then housing market falls
Yep.
with high interest
Yep.
rates.
Yep.
So given that they own a lot of hard assets, the underlying assets of the houses they've purchased, with the housing market falling, they're also going to fall.
Yep.
And that's why I've seen such a wonderful run up with them in the past 2 years specifically, is because the housing market has been going exponential.
Yeah.
So that's one thing that I got a little bit skittish at, because
Yep.
we have discussed openly that we think the property market's at its peak.
Yep.
Whether this is true or not, we don't know.
Yeah.
Once again,
Yeah.
we're just two friends having a chat. We're not predicting the future. So that's one reason. And the second reason, there's been the Royal Commission into the aged care sector
Yep.
has revealed quite a lot of negative, a lot of negative dealings with the elderly has come out of that. And when there's a bit of a stink around a sector, it seems to stick, the smell goes everywhere.
It's like the wherever there's smoke, there's fire.
Yeah. And I thought, although I'm not saying that they're a part of that,
Of course.
they're aged care homes. So, a lot of those people are still looking for themselves. But when a whole sector has a negative cast over it, when one company goes down, others can come down as a result of that. So I thought, I'm up, I'm happy. This is time for me to take my winnings.
Yep.
And
Crystallize the profit.
and go elsewhere.
Yeah.
And when you see such a growth in a company, you then look at them again and you don't see the potential for further growth of the magnitude that you've just seen. So for me, it's time to look elsewhere with my money.
Yeah, that's actually it's a really interesting point you actually just brought up there as well, with regards to when the percentage of increase that you've experienced and what more can be squeezed out of it, for lack of a better word. It's quite a common conversation when talking about like cryptocurrencies and the massive returns that they've seen, and people say, oh, it's going to go to $100,000. Oh, awesome, that's good. Like, if you put some money in it, you could double it.
Yeah.
You know what I mean? But that's huge. Bitcoin has to go so far to double your money. But, the early investors that had got into it earlier, and, if they held it, they would have seen phenomenal returns.
Yeah,
But
of course.
So it's all relative to
go from 100 to 200
yeah,
is easier than going from 200 to 400.
that's right.
And then it can't just continually double.
That's right.
You cannot go, nothing can go exponential forever. And I think a very famous case of this recently is Netflix,
Yep.
right? So everyone's getting on board Netflix. It's a growth company. They're doing so well. Wonderful. Subscribers are growing. Growth. Money. They missed expectations.
Yep.
They had their first ever decrease in subscribers. So they've reached the peak of where they stopped growing.
Yep.
And now they've got to find some other way to make money.
That's right. It's. I mean, I haven't really followed the market, that sector, too much. But being a consumer of that sector, and I think almost everybody is nowadays, there's a lot of competition. Like Disney is now bought it out. You've got Binge, which is a HBO. You've got Stan, which is more based in Australia, I think. Well, maybe not, but you got all these different platforms that are coming out. So there's a lot of competition.
And you know what they're going to do to try and regain that revenue, increasing revenue?
I do know, but tell the listeners.
Oh, I cannot believe this. Netflix are going to introduce ads.
Yep. I know, yep.
Shocking. I'll get to my views in a second. And they're going to cut down on people sharing accounts.
Yeah.
Now, people moved away from traditional TV to Netflix to avoid ads.
Yeah.
To then put ads into the very thing, the very reason why we purchased it in the first place. Oh my goodness. Unbelievable.
You know what I think about when you say that? I think about the in the movie actually not the Facebook movie. What's the name of that again? The Social Network.
Yeah.
And he sort of says, we don't know what it is yet. We can't monetize it. We don't know, we can't do anything with it. It's cool. People are engaging with it and people want to be there. We're not going to throw a bunch of ads or a bunch of pop-ups on the side to make it not, engageable. And yeah, it's exactly, they're getting to a point now where how can we create another income stream? I don't think that's the way.
I don't think that's right. And then stopping the sharing of accounts. So I'll be honest with you, I don't pay for my Netflix. I'm still on mum and dad's Netflix.
Yeah.
But they watch it for a combined total of, I don't know, probably 4 hours a week. And then I add an extra 2-3 hours a week. And then I pay for Stan, and then they share my Stan account.
Yep.
I don't think it becomes feasible for you to be paying that much money for just yourself to hold Netflix.
Yep.
Like, it doesn't make sense. If mum and dad get rid of their Netflix and I can't be on it, I'm not going to go buy my own Netflix.
Yeah.
So I've got Stan, or, you know, you go back to the traditional way, which is Pirate Bay.
Yeah.
illegal streaming. Like, as soon as the alternative becomes more attractive, you're going to lose more and more subscribers.
No, that is right.
And it's a downward spiral.
Absolutely. I mean, why in an increased competition environment would you then disrupt your product? We talked about a little bit, you know, before we were talking about Tesla synonymous with electric vehicles and Bitcoin synonymous with cryptocurrency. Netflix is synonymous with streaming, but they can easily hurt that image now that they do have the, you know, I guess the big boys, quote unquote, competing in that space.
Yeah. Personally, if I was them, I'd focus on making original content.
Yeah.
And diversify into that aspect, making movies, making
Agreed.
TV shows.
I agree.
And then, you know, potentially this one doesn't go on the streaming platform. This one you can sell the rights as a blockbuster.
Yeah.
This one you can, you know, sell the rights here, sell the rights there, and start diversifying your income that way and go down the supply chain instead of turning the consumers off for the exact reason they signed up.
Well, yeah, and it's a great point you touch on as well, because some of the Netflix series that I've created have been good, really excellent, you know, and so it's
some of those shows are the reason why you would go to Netflix.
That's right, yeah,
because they are purely for Netflix.
Yeah, exactly.
Yeah.
So no, that it is going to be interesting to see. It's certainly topical among everybody sitting at home watching the shows. So
yeah,
it'll be interesting to see what they do. I mean, I just don't see them putting ads in. Certainly not in the middle of movies. If they did that,
nothing turns me off more than when I'm watching Channel 7. Right, you're watching Harry Potter.
Yeah,
I love Harry Potter. Dumbledore, Hagrid in the first episode bursts through the door, and then ad break.
Yeah,
and then that's when you turn the television off.
Yeah, that's right.
And that's when you're going to turn Netflix off. That's when the consumers are going to deactivate their accounts.
There's a reason why they got rid of the intermission period in movies back in the day. That people want to stay engaged.
Yeah, I'd much rather sprint to the toilet, sprint back, than have an intermission period. Yeah, absolutely.
Excellent. Well, I think it's probably that time to wrap it up. It's been another good conversation, Tom, and always appreciate the insight. It's always excellent.
Thank you, Andrew. We'll see you again next time.
Yeah. See you guys.